Gold is soaring, but the big question is, will the rally continue, or is a reversal imminent? Today, we'll dive deep into the latest movements of XAUUSD and explore the factors shaping its next move. Get ready for a comprehensive breakdown, so you know exactly what to expect in the markets. Gold XAUUSD has seen an incredible surge over the past few weeks, hitting a new all-time high of $4,411. The market is driven by a combination of factors: heightened geopolitical risks, a weaker US dollar, and persistent inflation concerns. Recently, tensions in the Middle East, particularly between Israel and Iran, have escalated, pushing investors to seek safety in gold. Meanwhile, the US-Venezuela situation continues to put pressure on the broader global economy, further amplifying gold's safe haven demand. On the economic front, the Federal Reserve has signaled that interest rate hikes are likely to be paused, which has further diminished the appeal of the US dollar. This dynamic continues to provide gold with tailwinds as investors look for alternatives to the dollar, especially as inflation remains above the Fed's 2% target. Gold's upward trajectory seems strong, but with thin holiday trading volumes, volatility remains a concern. The $4,400 level remains key in the short term, as it marks a critical juncture where price action will dictate the next significant move. Let's break down the technical picture for XAUUSD. Gold remains in a strong bullish trend, confirmed by higher highs and higher lows over the past several weeks. The most recent all-time high sits at $4,421, and this will be the key resistance to watch. A breakout above this level could open the door for a move toward $4,440, $4,485. Based on Fibonacci extension levels, support levels are also crucial for determining the next move. The $4,380 zone, which previously served as resistance, now acts as a strong support if gold retraces. This area will likely provide the necessary base for a rebound. Below that, the $4,305 level and the 5 EMA provide additional support, marking a critical region for traders to watch. On the RSI Relative Strength Index, we're seeing readings between 60 to 68, which indicates healthy bullish momentum, but not overbought just yet. The MACD Moving Average Convergence Divergence shows a slight pullback, suggesting a potential cooling off, but the overall trend remains bullish. The 50 and 100 EMA letters are sloping upwards, further confirming that the trend is in favor of the bulls. Looking at the fundamental drivers for XAUUSD, there are several key factors to keep an eye on. Geopolitical risks continue to be a major influence. The ongoing tensions between Israel and Iran remain critical, as any escalation could drive investors back into gold for protection. Similarly, the US-Venezuela standoff could lead to further market instability, which would also favor gold's rise. From an economic standpoint, the Federal Reserve's recent actions are playing a key role. The Fed's decision to pause rate cuts this month means that the US dollar is likely to remain weak. In the near term, with inflation still above the Fed's target, there's little incentive for aggressive tightening, which supports gold as a store of value. Looking ahead, the upcoming US Q3 GDP report on December 23rd will be a crucial event. A stronger than expected GDP figure could put pressure on gold, while a weaker than expected reading would likely push gold higher. In the short term, gold could continue to target the $4,440, $4,485 range, with further upside potential if geopolitical tensions escalate or if the US dollar weakens more. Based on today's analysis, here are some actionable trade ideas for XAUUSD. Strategy 1. Conservative pullback by entry zone, $4,360, $4,380 stop loss, $4,340 below FVG take profit 1, $4,420 3 to 1 risk reward take profit 2, $4,450 5 to 1 risk reward. A pullback to the $4,380 area offers a great buying opportunity with defined risk. This strategy targets the next resistance zone around $4,420, $4,450. Strategy 2. Breakout by entry zone. Break above $4,421 stop loss. $4,390 take profit 1, $4,465 take profit 2, $4,500. For more aggressive traders, a breakout above $4. 421 signals the potential for a continuation of the rally toward $4,465 and $4,500. Strategy 3. Range trading active by zone, $4,350, $4,370 sell zone, $4,410, $4,420 stop loss buy, $4,335 stop loss sell, $4,435. During low liquidity periods, range trading can be a profitable approach. Watch for consolidation between $4,350, $4,370 on the buy side, and $4,410, $4,420 on the sell side. Conclusion: gold's bullish trend is likely to continue, unless we see a sudden shift in market sentiment. Be mindful of upcoming data and geopolitical developments, and always manage risk. If you found this analysis helpful, don't forget to like, comment, and subscribe for more daily updates. Disclaimer: this video is for educational purposes only and does not constitute financial or investment advice. Trading and investing in financial markets involves significant risk of loss. Always do your own research and consult with a licensed financial advisor before making any investment decisions. Past performance is not indicative of future results. The views expressed in this video are based on current market conditions and could change due to unforeseen events.